Phone to see if we are live. All right. Looks like we are live. The Prospero.Ai stock market live streams. Good to see you all joining in right now. Be sure to like up the stream today. We have a bunch of topics that I think you'll enjoy greatly. Let me know who's here in the chat right now. Comment. Let me see who's the usual suspects. As always, I'm going to take you guys through the topics that we're going to talk about on today's stream. There's a lot going on in the market. It just seems, you know what? Are there any bears left out there? Comment if you're a bull or a bear, because it seems like the market, all of the bears are in hibernation. It just melts up day after day. And the first story we're going to talk about is a catalyst of the market going higher recently. A stock that has just ripped. It's going for 11 consecutive straight days. Tesla stock. How much juice is left in the tank for that stock after the rally it's had, and what should you do if you're a shareholder? Should you trim some gains? Should you just hold on for the day coming up August 8th? We're going to talk about full self-driving. A lot to discuss in Tesla land after it had been beaten down for so long. Maybe it's a short squeeze. We talked a little bit about that on Monday, but we'll give more details on that. Then we have a CEO of one of the Magnificent Seven stocks selling $863 million worth of shares. I'll tell you who it was and which company. And they also filed to sell up to $5 billion worth of shares. So I'll fill you in on who that is. Then we're going to do a little preview of the earnings season because it's coming up before you'd think. I think we're about a few weeks away, maybe 2 or 3 weeks away from the banks, which will kick us off. And then all of the tech companies to follow will be in the throes of it. So we'll do a preview. Can AI deliver again after the market has rallied so much recently? Is that a high bar going into earnings season? We'll cover all of that. And then if you tuned into Monday stream, we compared two stocks, Starbucks and Nike. It was kind of interesting because they both had pummeled down to 52-week lows or right near them, and they were actually trading at a very similar price. And the people that were in the stream enjoyed that conversation, I believe. So I found two more stocks that are in a very similar spot as those two. Both have recently gone through a stock split. We're going to talk about Celsius and Chipotle, which both are, funny enough, trading near the same levels as well. Which one should you buy? Which one would you rather hold? Which one should you invest in? Then we have a little bit more of macro stories to cover. We have a new ban of stock trading that was proposed and passed by a bipartisan deal for a ban on Congress members from trading stocks. A lot of details about the deal and the penalties of it. I'll take you through them later when we discuss it in detail. But I know it's something that a lot of retail investors have been asking for a while. There's been a lot of coverage of Nancy Pelosi and her husband trading in the market. There's even Nancy Pelosi trackers now on Twitter and stuff. So it looks like could be a possible ban in the near future. And then we're going to talk about CPI tomorrow. Now, CPIs have been bullish for the market the past, I think I looked at a stat, the past 8 reports, it's been positive or it has reacted negatively the day of and then recovered all the gains the day after. Can that continue tomorrow? We had Jerome Powell speaking this week, so we'll get into what Powell was saying and the CPI tomorrow, potential market mover. So now I'm going to take you through what we're seeing in the Prospero signals. Oh, I see a comment already. Good to see from Nissan. Hey, good Avgo into earnings. Got to give credit where credit is due. That's the Prospero signals for you, Nissan. Glad to see that it worked out for you this time. I see George has joined the stream, I believe. Let's see. Yes. Are you frozen, George? No, you're not. I think we're good.
I think yeah, are we good?
Yeah, we're good to go. So last thing I want to do before we get into.
Oh, no, I can't hear you.
You can't hear me? Can the stream hear me?
No, I was changing my settings and I ended up switching my I switched my microphone to my speaker. That's why I couldn't hear you.
Thank goodness. I thought I might have been on mute for the first 5 minutes of the stream. That would have been a nightmare, but we are back
Nope,
rolling now. But I do
I'm
want
normally the
to,
issue.
yeah, no, it's the tech. Okay, so I want to cover the QQQ and SPY net option sentiment. I like to update everyone, start a stream and end the stream, see if it changes throughout the day at all. I will also note that so the QQQ is at 53, but it's also starting to look like, if you look at the time series graph for all of our viewers in the Prospero app, it's starting to separate from the price a bit. So maybe in a second, George, you could tell us if there's any feelings we should feel about that. Whereas the SPY is at 48, a lower level, but the time series graph, it's not as sharp of a decline. So maybe we could start right there. We'll talk about the markets being up today and the levels we're seeing of the net option sentiment for the QQQ and the SPY.
Yeah. Sorry, I'm saying one more thing. I'll
No
be
problem.
right. I don't want
I
to
could read.
multitask.
We got some comments from Nissan again. So let's get real. When is the fun, guys? I'm tired of squinting at red and green screens. Then we have John Foster. Yes, we can hear you. Oh, thank goodness.
So yeah, all right. I got it all. I got it all in. My laptop stand is now falling a bit. Anyway, when is the plan? That's hilarious. We'll talk about that a little later. We are thinking about moving closer to like wealth management tools. That's generally not what we want to do. For many reasons. I mean, the biggest is that 0 and 20. Wow, you think we're gonna be like a hedge fund? That's funny. Like there's a lot of competitive products out there charging very low prices that are not as effective. But yeah, I mean, for us, we think that the best way for people to manage money is to teach them how to do it better themselves. You know, once you start getting in the game of moving billions and billions of dollars, it gets harder and harder to get everybody a good return the way we can do now, especially because we're not competing in the actual trades. Longer term, we are building, we want to build a lot of users that trust us, believe in what we're doing, and then can create an exchange of data. That's what we really want to do, where we can actually get data from our users that we feed in, and then we can actually beat hedge funds at scale. And then those are going to be the great times. And I think we're well on the way to doing that. But, that's our plan. If you rush doing the asset manager, then you end up killing your alpha. And we could basically trade all of our really good signals into the market if we put enough money behind it. And that's kind of like the last thing that we want. I need to fix this computer because it's driving me crazy. Or maybe I'm just going to take it off its got to, because it's driving me nuts. Hold on.
Glad to see the chat is popping early in today's stream. No, you don't need bees. You need 500 million capped with 0.50 economics. Roaring kitty times from Chris.
Yeah, I mean, Roaring Kitty might end up in trouble with the SEC. So that's not a good example for us. Okay, now this thing can stop driving me crazy. My computer was on like a laptop stand and was like slowly falling. Anyway, back to our schedule program. QQ net option sentiment took a huge dive to 48. That's really low in the midday, but it's recovered a bit to 53. That has us cautious, like, about tech in general. We've definitely, when we wrote about it, seeing SPY net option sentiment getting stronger, that might mean we start leaning more towards market breadth. We're watching that really closely. Obviously, that's not what we've been doing lately. We've been playing very well the tech heavy portfolio. That's because what QQQ net option sentiment has been telling us. But with this falling a little bit and SPY kind of in a rise, we might be reevaluating that very soon. We're very driven by our signals. And and we've got our eye on that. That's definitely been a pretty a pretty straight pattern. SPY net option sentiment getting stronger, QQQ getting weaker.
Yeah, so that's something to keep in the back of our minds as we get into our first topic of the day. And also later in the stream, we'll talk about CPI and maybe the market's getting ahead of that. But I want to start off with Tesla. People always love when we talk about Tesla stock. It has, well, if it finishes up today, it'll be 11 straight days of gains for Tesla, and it will be up over 40% in that time. Kind of crazy. If you're a Tesla shareholder, what do you think you would do, or how would you feel after the stock has had such a parabolic move? And does this kind of bring up the philosophy of time in the market versus timing the market? Because a move like this, I don't think you could ever predict. Maybe with the Prospero signal stuff.
Yeah, I mean, we've been playing Tesla in our model portfolio and our higher risk, higher churn portfolio. So like, yeah, we definitely like, you know, Tesla if we're taking on more risk in a larger portfolio. But, what we're seeing here doesn't make it any less risky in our eyes. Like, the basic behavior is like we see them betting heavy on AI, which may or may not work out. They're obviously betting heavy on a political situation with a CEO that's more politically aligned than I've ever seen a public company CEO, be in public statements. We have the compensation package, and the fact that it was struck down by a court last time. We don't know if there's more of that coming, or if that kind of ship has sailed. There's so much binary risk involved in Tesla that I feel the exact same way about it that I did before this run, which is that it has a very high potential to have big gains, but it has a higher potential to have big losses as well than I like in some of my stocks. And you could see that in the upside downside ratio. Like, for other stocks of equivalent upside, it has like a lot higher downside than some other stocks. So of like, in the high 80s, low 90s, that kind of thing where it's been. So that's just a manifestation of the additional risk that you're feeling with it. But like, yeah, it's on a great run. It's on an exciting run that I think is based on, somewhat on, someone, like some people betting a certain political situation would help Tesla. And I don't think they're wrong. I think if there's the now more likely political outcome to happen, that'll be very good for Tesla. So I think that's one of the main reasons, we basically saw a lot of this momentum increase since one of the candidates looked a lot better than the other one in a debate. And I don't think that's a coincidence. So yeah, I think that, you're looking at that, and the story on Tesla is the same as it was before this run. There's a lot of potential if they're right on betting on AI, getting self-driving to roll out. And I think a friendly political environment is a reason to bet on that more for sure. And I think that's a huge potential and a reason to bet on it. But there's also a lot of downside risk if any of the risk factors that I named don't pan out. And yeah, I would say I want to keep going on this thread. Covey, we know about. We also know about Delphia. Both of those things, failed. And we were kind of worried about those risks beforehand. We are not of the belief that you can scale a data collection operation and a wealth manager at the same time. I think even if you do everything right, which I don't think either of those companies did, there's a big risk with the SEC. And, what we want to do is much more focused on building trust, scaling our user base, and then, worrying about asset management later when we have a really good relationship with our users and we can build out things that they want, that we know they want, that we also, have the proper, testing with the SEC where we can make sure with them that everything's above board and they like what we're doing, as opposed to the move fast, break shit policy that every other startup seems to have. We have a long-term plan. We've been executing it, and we're going to get there.
Yes, I love being a part of the Prospero mission. It's a beautiful thing to watch play out, and it keeps growing day after day. The next story we're going to discuss, I teased it. I didn't give any details for the people who were here early, but the CEO who's been selling shares has been Jeff Bezos. He sold $863 million worth of Amazon, and in his filing, uh, it allows him to sell up to 25 million shares, which would be about $5 billion where the stock is trading at right now. He sold 50 million shares in February, so he's dumping Amazon so far this year. Um, we've kind of covered stories like this before. Maybe some people haven't heard us discuss that. So, how should people think about uh, when a CEO is selling that many shares and that much of the wealth in the company?
Well, he's not the CEO anymore. So
You're right.
um I don't
He's always a CEO in
necessarily
my
think,
mind.
I mean, I know what you mean. I don't necessarily think though that um that Jeff Bezos uh it's a signal about Amazon at all. I mean, I think Amazon's at a great price. The one complaint I always have about Amazon is it's always expensive relative to its forward earnings. But like if you weigh that information too much, you could miss out on owning it a lot at all. So there's kind of that relationship. It's the company I want to own the most over the next 10 years on that longer time frame. Obviously, it's not in my portfolio now because, you know, I think about, ROI constantly. And it's the same thing when I talk about Bitcoin, which is just like, yeah, I think Bitcoin is going to be great over 10 years. But in the short term, there's very safe tech investments like Broadcom that was brought up at the beginning of that we've been killing it on. And we were like, I think very early to the game on loving Broadcom. I'd rather, churn those investments than just like sit on Amazon, but on a long-term scale, if you just want to own a portfolio for a long time, it's my favorite stock to own. And, a lot of the times I'd say it's a bad sign for a CEO to own the stock. And he's not a CEO. So I think there's that. But I think Jeff Bezos has a lot of like different interests. And, I think he wants to go to space and that's expensive. What was the quote you said, Stephen? I liked it a lot.
Yeah, so Elon was quoted a while back and he said, "How do you make a small fortune in the rocket business?" And it's you start with a large one. So it's a very expensive
So
industry.
So yeah, I think he's got a lot of other interests. An expensive divorce. Uh, that I think I hear a lot of bullshit about like when CEOs like we like. I think our most popular TikTok was when I talked about it with Tim Cook, where it was like, oh, Tim Cook's got to do this or that. Like Tim Cook is not like living a very lavish life. Anything Tim Cook wants, he can borrow against his Apple stock. Like not I don't really know of any like expensive business ventures like building a space company that it makes absolute sense. You need cash to do that. You can't just like borrow against your shares on an ongoing basis. Sometimes you need the dry powder like to show and even get other investors involved. They want to see money in the bank. Um, they don't want to necessarily see Amazon stock. Um, so like that is a reason, but I think what we could just be seeing is a sign that regardless of any other financial commitments, that he just wants to diversify more. And I think that could mean something about his opinion on Amazon being overvalued. I don't want to speculate on that. It certainly could be the case. It could be the case that he thinks that they're trading at too high of a multiple and there's other stocks of value. But like more than anything, I would just say that like it's very clear him leaving Amazon means he's diversifying his interests. And if you're diversifying your interests, diversifying your money around those interests, I do not think is a sign one way or the other.
So now here's an interesting thought experiment. Who would you bet on to be more successful in their space industry ventures, Elon or Bezos?
I mean, I would I would have said Elon Musk a year ago, 2 years ago, just because there's been no one better at making big dreams come to life. But like making big dreams coming to life, being a CEO, like I think one of the most important things about it is not alienating anyone. And like I think we've seen more and more stories about like Elon Musk alienating the people around him. Like, even if just you just look at what happened to X and all the people that are like leaving, fired, or whatever, like, say what you want about if that's a good idea or a bad idea. It's not exactly what you want as a startup CEO. Like when someone's recruiting you and, he laid off his like supercharger division. Like, after that being such an important division that like got contracts with like, Ford, GM, like that to me is a weird message to send to people. And yeah, he's going into AI, whatever, he could win. Like, I think people want in the startup space, they want something exciting, but they also want something stable. And Jeff Bezos is so good at process, rolling out products. So I give him the slight edge now, just because, like, I think Elon Musk, while kind of better sold as a visionary, is starting to become a little too erratic and confusing. And I don't think that makes you the best recruiter. And recruiting is such an important part of optimizing a high growth startup.
Well said. Now, I think one of the things we've talked about the Prospero signals, one of their like best attributes is giving investors confidence, um, even in a situation where my natural instinct after the market has risen so much would be I'm nervous about earnings season because I think there's going to be a high bar if the stocks have rose so much. Could you give us a little preview of how you feel about the upcoming earnings season? Any expectations? Do you think AI will deliver again? How do you feel about? I think it's going to kick off in about 2 to 3 weeks with the banks.
I think it's, surprise, surprise me saying this. It's going to be all about AI again. Like, and what do we say about AI other than like, I think it's hard to bet, like the way it's continued to grow. I think it's very hard to bet against AI. So I expect it to keep going. That being said, can it keep up this pace forever? No, I don't think so. And even like a slight deviation from these incredible growth paths, I think is going to be a very potentially tough, for the market, especially as it relates to chips. We've started to back off chips a little bit. Obviously, we're in SMCI now. We prefer ABGO just because it tends to be like a more stable thing, but we've been in and out of SMCI a lot. But I really, and just a note, people are saying they might pre-announce soon. So we've seen them lighting up the short-term signals like high non-options, high social sentiment, but also high dark pool and high short pressure. So it's kind of all over the place in terms of that. So we are definitely like, and I think I mentioned that because that's a reflection of, I think, a market that is just getting increasingly unsure of exactly if, these companies are going to keep beating, which makes the risk high and the reward high if you're right or wrong here. How we tend to play these earning groups is what we'll do is like if SMCI is reporting, we might play Nvidia or Broadcom. So we might not play a direct earnings, we might play like an offshoot earnings. That's like I would say what we'll almost definitely do if we're still seeing high QQQ net option sentiment and net option sentiment for especially the chip stocks going well. But the other thing I'm watching is consumer discretionary, where I expected earnings to start and like, Nike earnings certainly disappointing. Like I've been expecting and betting against consumer discretionary all year and doing very well doing that. But we're seeing signs that that consumer discretionary is going back up. And that might be because people are hearing whispers that the consumer discretionary decline isn't going to be as big as some thought, or at least as big as some thought on certain brands. Like we've seen Wendy's continue to get hammered while McDonald's is, starting to do well. So what we might be seeing is that there might be some overall economic concerns with consumer spending on an ongoing basis, but we might see some confidence that certain companies are weathering the storm well, are going to come out looking, better than some others. So that's something that we're really going to keep our eye on. And, as a result, as consumer discretionary earnings start coming in, that might be a big opportunity if you start to see a trend where, some of the brands that are better managed are doing well. That might be an opportunity to jump into some other ones that are doing good things, like McDonald's, to, do their $5 menu, reach out to people, even in just marketing, reaching out to their customers, saying that, like, we're doing something to help this become more affordable. I think we definitely want to look out for that. And yeah, the other big thing is, energy utilities. Like, we've seen utilities do well this year, then start to pull back. Energy has been much more up and down. But I would definitely say a big thing to watch out for is if energy is disappointing, if utilities continues its pullback. I would say that's even more of a sign that tech is going to get more money funneled into it. So that's all the things that I'm looking out for.
I like that. That was a great full thought on that. I just want to cover one thing. Maybe if people, because you say the market might be sensitive to especially these high growth areas, the AI. Um, so could you kind of talk about if these companies report accelerating growth again versus decelerating growth? And because I feel like that could get confusing to retail investors sometimes, to where like Nvidia and a lot of these AI companies can still grow massively year over year, but their growth will actually be decelerating possibly, and how investors and like institutions will feel about that if that's the case.
Yeah, I mean, I think we talk about it all the time. And, you know, guidance is going to be what's more important. Even if Nvidia beats or SMCI beats or any of these places, I don't think that's important as them continuing to increase their guidance as they have. Like, even a double beat and them, softening guidance, I think could cause like a lot of tech stocks to go down. um, but that's one of the reasons why we are starting to play things like Microsoft, because we think there's that same AI upside and not as much of necessarily like a realized gain, in terms of like how much potential, the chat GPT business and like associated business have to grow, especially with like something like an Apple partnership and them starting to monetize that. I think that that's a big thing. Another thing with like Amazon, they've claimed that people are going to pay $10 a month for their next gen Alexa. And I'm kind of just like, oh, like, what is that thing going to do? That's very interesting. But like, I don't necessarily like, it would have to do something pretty amazing for me to do that. I'm actually thinking of that Black Mirror episode where they like shrink a version of you, and then that version of you is like operating your curtains and everything like that. I kind of am like, I'm kind of, if they ask me to send a DNA sample for to use the next gen Alexa, I'll be a little concerned that might happen. Um, but yeah, I absolutely, that's how I'm thinking about risk, because like playing the continued AI market, I think, is a must for people, because like I've talked about this a lot in my newsletters recently. Like, assuming that something that has been a pattern, AI carrying the market, AI continuing to grow, assuming that pattern is going to break isn't a very wise way to play the market ever. Like, I know there's some people that are apprehensive, and that's one of the things we really take pride in Prospero. Like, that you can continue to make bets. Like, we have aggressive tech bets, and we can count on things like QQQ and SPY and option sentiment to get out in front of big losses and telling us when these trends might change. But like I'm saying, I think there's so much tied up in, say, like Nvidia or SMCI continuing to beat guidance. If you're feeling conservative, you might want to go with uh, a Microsoft, a Google, a Meta, an Amazon as a way to get like some good AI upside as well as the downside protection, because the upside again is significant for these chip makers, but the downside, I would say, is getting to be greater and greater and greater the more they continue to beat and beat and beat. And I think that's something to be cognizant of. It certainly is what I'm cognizant of. And that's the important thing we always stress, where everybody's like, oh, like I told you to buy NVIDIA. Like NVIDIA, like is like, You and everybody else knew to buy NVIDIA. The question is, what's the downside? What's the risk on that other side? And I think the risks are mounting, and they're better risk reward plays going into these earnings than NVIDIA. It doesn't mean they're not going to beat and it's going to go up like crazy. It's just not the kind of play we're looking for with like how tight the market has looked, especially around chips. Like, go look at the daily returns for SMCI like the last 2 weeks. I'm pretty sure there's like a number of days where it's been up, down, up 5%, down 5% the next. Like, people are not decisive on these stocks. NVIDIA has been very up and down too, not as volatile. SMCI is, since it's a newer stock, earlier in its growth phase, less profits, going to be a little more in terms of that volatility. But we're seeing an indecisive market, especially with that, and that gives us pause always.
Yeah, you got to have strong conviction to hold some of those companies when they're moving that much every day. I want to do a quick pit stop at Nissan's question. I looked up both the companies he commented, DAL and PEP, Delta Airlines and PepsiCo. They both have earnings this week. I think that's why he's interested in them probably. But I think he just wanted your thoughts on both of those companies.
Let's take a look at Prospero. I don't love airlines right now. Wow, this is an interesting one. Dell has a 33 upside and 38 downside. So not strong bets on the bull or bear side. But it's got some nice net option sentiment movement. So, maybe people are expecting a good downside breakout is also going up in addition to net option sentiment. Upside breakout's going down a little bit. So that's interesting. Long-term bets are looking less bullish while short-term is looking a little more bullish. I mean, when I look at something like this is not something I touch. If you like to play a lot of short-term things, higher risk, this could be a good play with the net option sentiment trend, with net social sentiment. But I wouldn't personally touch that, not even in my high risk portfolio that holds like 100, 150 stocks at any given time. Pepsi looks very similar. Better than institutional flow, but Pepsi does have upside breakout going up and downside breakout going down. So that has a bit more potential. But also still something I don't like. The downside being higher than the upside is a no-go for me on a long. But it does have higher net social sentiment and net institutional flow. If you're going to play one or the other, I'd play Pepsi, but I don't like either of them.
So let's keep the Prospero app open because I want to do another would you rather with two companies like we did on Monday with Starbucks and Nike. Two companies that have recently stock split, Celsius and Chipotle. Both have been kind of laggards since they split. I know Celsius, we get asked about a lot, was one of the favorites in the signals for a while. How do those stocks look compared to each other?
Let's look at, CMG is just like not looking as exciting since the split. And I don't know if that's because people were basically like playing a lot of options going into the split. It could just be timing with consumer cyclical not looking as good. Celsius, we played because it had high net social sentiment, even though it wasn't as good in our metrics. Like, in terms of a consumer defensive stock, Celsius is like one of the top ones. I prefer Costco over Celsius right now, but like this is something that we would invest in our higher risk portfolio. We probably shouldn't have invested in our high conviction portfolio. We were sold on that net option sentiment. That net social sentiment, being at 100. But yeah, I think, growth of 73, upside 61 relative, like this is an investable company. The other three I wouldn't call investable by our standards.
Which are very high standards for the people watching. Okay, so we have an update on a story that retail investors have paid a lot of attention to over the years, which has been people who have government positions doing stock trading. One of the most popular people who's been called out in this is Nancy Pelosi. So the senators have struck in a bipartisan deal for a ban on stock trading by members of Congress. It includes their spouses and dependent children. It would go into effect in 2027. The penalty for violating, if it goes through, is their monthly salary or 10% of each asset in violation. Are you happy, or do you have an opinion on, if this is good for the market or not that this is happening?
Oh, I mean, it's great. Like, there's nothing more kind of annoying um than like people using inside information, basically. And it's not even right now illegal for someone on like a committee that is passing certain legislation that will benefit certain sectors or companies or whatever to make a bet on that. And that's just insane. That's not what we want in the market. I mean, truthfully, this is the kind of thing that Prospero picks up when people are making bets based on information. So I think that that's the only way we can kind of get ahead of some of these things people using. But there'll always be people with inside information acting on it. But it shouldn't be our elected officials. Like, it's just, if people want to make money trading stocks and like getting inside information, they should just go work in the hedge fund industry. Like it's just kind of offensive whenever I see it. Like, whenever you see like anyone like kind of looking at um I'm just going to come out and say it. Politicians that are billionaires. I don't like it. Like, and we all know who I'm talking about or anything like that, and who are like making their money as politicians, making that much money. It just shouldn't happen. It's not it's not a it's not a position that should be getting people in that they're attracted to it because they're going to make a lot of money. It's just wrong. It sits with all of us wrong. I would say that law is a start, but it's not going far enough. Like, every politician should have to place their assets in a blind trust, not just the president, anyone. There's no reason why someone else that assuredly doesn't have any inside information is managing the assets and doing it. There's just absolutely no reason. And it puts in perverse incentives to become a politician. And no, I mean, what I would say is, like, I think politicians should be paid more so they don't have to like make money in like, ways like this, trading on inside information. But I think there should be a certain amount.
I think probably a vast majority of investors and people in America are probably in agreement with you, everything you just said. We got a question while we were talking by D. Luz from Twitter. Good to see people on Twitter commenting. Is SoFi a buy?
Oh, I've never even seen that happen. I don't know how people do that. I always thought we'd have to look on Twitter. Let's check it out. That's actually looking pretty good. I like the net option sentiment. Like, the way I feel about stocks like this, it satisfies all my basic rules, right? I mean, barely. Like, my basic rules are upside has to be higher than downside. Profitability plus growth above 100, net option sentiment greater than 50. Those are my basic yes, no rules. But ideally, I like upside to be 30 points higher than downside, profitability plus growth to be greater than 120, net option sentiment to be greater than 80. Those three rules are my clear bull signals. So this satisfies a basic buy, but not the really big thing. Not like my higher order ones that I tend to do for my higher conviction picks. But the thing that I always say is, like, this is not a no in Prospero. And the most important thing in it as an investor is to go with your own conviction. So if you really like SoFi, it's one of your favorite stocks, you like the business, you see a lot of growth, like, Prospero can affirm that by basically saying, no, there's no like hard and fast, rules here against it. But for my risk reward practices, it's not good enough for that, for me to go in my high conviction portfolio.
So
I mean,
it's
it's really just those three, but I'll make it. I'll make it for next week, and we can talk about it. Like what my optimal rules are. I mean, it's also like you've heard me talk about them. It's also short pressure and dark pool less than 70. And then that's pretty much it.
I see we have a ton of viewers tuning into the stream today. Thank you all for joining. Happy to see everybody in here. Happy to see the chat is popping as well. We have another question from Twitter. Will there be any rate cut going into the election?
I would be very surprised if there wasn't. The way that the Democrat for president, the current Democrat for president is performing. So I think we're already starting to see it with Powell saying like, oh, like I think that's one of our next things, but with Powell basically coming out and saying there's risks to not cutting. So yeah, I think that he's getting some pressure from his boss to do things, to cut rates, like stimulate the economy more. Like that's the best chance. The stock market doing as well as possible going into the election. That's one of the best things for votes. And I'm sure this administration is going to do whatever they can to stack the deck to do well with that.
Yeah.
So yes,
like
I expect there to be, to be very clear.
And our last topic of the day was CPI tomorrow, and I think we'll get a much more clear answer after that's out tomorrow on whether we'll get a rate cut maybe as soon as September. After that's out, like you said, Powell was speaking the past 2 days, and he said there's now a 50-50 risk on each side of whether it's more risky to keep rates high or drop them too soon. So that's kind of a change in his philosophy. But yeah, do you have any expectation for CPI is going to move the market tomorrow?
I think I think unless it disappoints, like it's going to be a good day for the market. Like I think even if it meets expectations, everyone's going in the direction of expecting this rate cut to happen and more and more. So like I think it would have to be a miss. And even if it's a miss, I don't see like a severe downside, because I think like basically what he's saying is even if CPI misses, they might cut anyway. Like I'm not going to say like if there's a big miss, like it's not going to be a good day for the market, but I think everybody's basically lining up at this point to saying that we're going to get a cut. So I think in the past we've actually seen bad days in the past few readings by it just meeting expectations. I don't think that's the case. I think if it comes in line with estimates, it's going to be a good day for the market, especially based on what Powell said. You have more on this, or do we need to talk about our airline stock obsessed friend?
No, that's about it. We can maybe get to his question and then do our switch over.
Yeah, I'll do the switch over. ALK. I don't see anything I like about ALK. I mean, maybe like the up and down is what you're talking about in terms of an option sentiment. That just means there's people like when I see something like that on that net option sentiment, it means institutions are swing trading Alaska. And like that's not necessarily going to show up as much because like remember these are 3 price things like a day, so you might not necessarily see all the swing trades, but you can see how some of the peaks and valleys are like lining up a little bit. But like yeah, that's what I see, but there's nothing I like about this stock.
There you go, Nissan. I think it was misses on all their airlines, huh? That were brought up.
Yeah. I'm short a few airlines, but Spirit the most. All right, I'm getting out of here. I'll be on the portfolio.
Yep. We'll see you in the Prospero laboratory, George. Chat, stick with me for a second while George does his switch over. I see we have a ton of people that have tuned into the stream. So if you haven't seen it before, George is going to do the model portfolio update. So you'll get to see moves that he makes live, how he's thinking about the market, how he's changing the portfolio. So it'll be very interesting for a lot of you, I'm sure. We got B plus Uzwal. Even if there was no volume today, SPY, why was stock trending higher? I'll be sure to spin that question to George when he gets back on the other side. Let's do another check-in on the QQQ and SPY net options sentiment before George joins us. Looks like the market has continued to melt higher in the time that we've been streaming. All right, let's pull up QQQ. So the QQQ is now at 52. So it's up off its lowest level of the day, which was 48, but it's still lower than it has been. So maybe a little bit of concerned emotions amongst the institutions before CPI tomorrow. Let's look at the SPY. And the SPY is at 48. So getting back close to the QQQ in terms of net option sentiment. We got a question while you were gone, George, about with low volume today in the SPY, why was it trending higher still?
Like, why is the SPY or SPY an option sentiment, or what's the exact question?
Well, his exact wording is, even if there was no volume today, SPY, why was stock trending higher? I think he's talking about the overall market.
I mean, low volume doesn't inherently have like a direction. Like, lower volume, I think, actually just makes it easier for, it to be swayed by, smaller players. So I think that, like, that's all that we're like you tend to see that, like, other people are going to be playing like a certain market direction more based on that. And I think that's all that we're seeing. Like, I don't think low volume implies one way or the other. And if we're seeing like good net option sentiment numbers, then no reason why it wouldn't be up on a low volume day. Oh, look, tech had a nice comeback, as did materials. I'm sure that wasn't good for the materials stock that we added.
I think the market usually has low volume in these dog days of summer, right? Even more so in August than I guess now. But
yeah, definitely in August. What are the QQQ and SPY and option sentiment readings?
QQQ is 52 and the SPY is 48. Maybe hold up on the diversification. Tech is looking strong and QQQ is still higher, so we will look to add in various places. Real estate is looking like something to target a little more on the bear side.
Oh, look, small cap. Again, small caps are reversing.
Another shift for small cap makes us feel good about the general plan to stay away from those stocks. Overall, not much change here. In terms of adding longs, we are planning to lean towards large cap growth anyway. Small caps just get no love.
I know. There was a time. All right. Oh. ZS. I reached too far into the bag of chips, maybe. I always feel like I expand the footprint sometimes too much, and then it punishes me. But we're gonna look up Zscaler. How's the net option sentiment trend on Zscaler? Oh, it doesn't matter. We're keeping it. I like the 30-minute trend. All right, what else we got here? What about now?
Gabe is asking for advice on HUBS hubs after it's down 12% today.
12%? Wow. What happened there? Is there a news event?
Let me do a little digging, see if I can find anything. The net option sentiment is still 91.
What are they doing to that poor stock? I mean, net social is low, is 19. Makes me wonder if there's some kind of event going on with it.
So the story that pops up when I look it up is Google shelved acquisition plans.
Oh, yeah, that'll do it. Oh, well. Open and shut case. What did I... Do we have any? Oh, I got 2. God damn it. I was thinking I wanted to divest from that a little bit. Oh, well. We got 1 Netflix still. We're fine with that. Are we in a win or a loss on HIMS?
Loss.
I think I still want to get out. Ooh, Kava's going way down. I'm holding on to hubs for another day. Like that's just like I could see it recovering tomorrow. That's like it's just a news event. We can't. The last thing you want to do is like, yeah, it could go down more tomorrow, but I'm not ready to give up on it quite yet. I want to divest a little more tech. Where are we on those microns? MU, we have 3. I thought I closed one. Well, I want to close one regardless. I hope one's a win.
I see win, loss, loss.
We'll grab that win. All right, LRCX, anything else? Is CRM a win?
Currently a loss.
All right. We might just make up with it for like adding more shorts. I want to be a little more short.
Nissan is asking, is the model portfolio reflected in dollars or points in time?
Just points in time. We don't want to mess with like for securities laws. We don't really want to mess with like dollars specifically. So it's just like everything's equal weight, equal positions. Like we find it to be very easy to do from that perspective. Wait, are we long? Oh no, HLT. I was like, are we long and short a stock? But no, we're not. That would be wasteful. Oh yeah, look, Max N. Anything else? I want to look. We were right about that. Scott's Miracle Grow. What's going on with the trend? Is LW a win? And then what's the trend on net option sentiment?
LW is a win. Net option sentiment is trending downward. It's at 21 currently, slightly off the lows of 7. It was earlier today.
All right, no problem. There we go. All right, anything? I think we might just focus on the long side. Or we might just focus on the short side unless anything's really calling out to me. What's going on with PDD net option sentiment?
PDD is uptrending pretty nicely, currently at 82, the highs of the trend.
I think we already have 2 open, right?
PDD. Yes.
Okay. All right, now we got to grab. Can you tell me about the IMMR net option sentiment trend? I don't think I have the guts for that.
It's at the bottom of the trend, down to 16, but it was at 50 just a few days ago, but it's pretty volatile.
We're avoiding. How about 2?
Which one?
2 TWO.
2 is also near the lows of the trend. It's at 19. Holding steady downward, though. The trend only goes from 28 to 12.
BKYI. Talk to me about the BKYI net option sentiment trend.
Extremely stable between 37 and 43. It's at 37 right now.
I don't think I like. Oh, 3 million market cap? Forget it.
3 million?
Yeah.
My God.
I know, it's crazy. We said we were going to do more real estate. Here we go. UDR. Talk to me about that.
UDR is at 8. It's a volatile trend between 50 and single digits, but it's at the bottom right now.
We're going to diversify a little bit. Now we wanted to get more shorts.
Got a question about what trading application you're looking at.
Trading View. Some people like Thinkorswim, but I really prefer this interface. What about SunWest?
SunWest?
Yeah. I don't know. I don't even see that anymore.
Yeah, I don't see it. We crossed the 10K viewer mark. Thanks for everybody tuning into the stream. That's pretty cool.
Yeah, I think that's the first time we've done that. We'll finish this strong. What's going on with Rio? No, down here. They're not cooperating. Okay. Can we get one more? Whatever. We're pushing it a little. Sorry, everyone. What about SPGI, the net option sentiment trend? Oh. No, we're pushing it.
It's that 31 holding steady in the 30s and 40s.
No, it's just not. It's not what we're looking for. All right, we're doing calm. Now we got to print it. Oh, damn it, I forgot to update. Too many things I was doing today. Okay. We're a little late, but whatever. Everybody can see we weren't cheating on the prices. All right.
So we did have a question I was holding off because it might be, I feel like, a longer answer than you could say while you were trading from Nissan. Obviously, you guys know what you're doing and you have your own plan, but it might be helpful to have an audible track record where records cannot be edited in retrospect. Not saying that this is what you're doing will impact diligence.
So we have like our emails, our picks get sent out. Those are timestamped, right? Anyone subscribing to our letter, like then all our other changes are made via chats, timestamped. So yes, we could go edit the sheet, but anyone else could figure out pretty quickly if we're lying because our picks are sent out via emails that we can't change. Our chats are sent out and we can't edit those chats.
And I think the longer you watch these streams and maybe subscribe to the newsletters, the more trust you'll have that, the picks are the picks. They're not being changed.
Yeah.
But I think that's it for today. Anything else, George?
Nope, that's all.
All right. All eyes on CPI tomorrow. See everybody back here Monday. Normal streams.
Thank you.
Bye, everyone.